Okay, here we go. It's time for the final round of the 16th Annual National Personal Finance Challenge. All right, question number 1. What is the term given to the amount in an account that is separate from any earnings or interest that has accrued?
20 seconds. Five seconds remaining. Get an answer down. And time is up. Let's see your board.
All right, team 1.
Principal.
Team 2.
Principal.
Team 3.
Principal.
And team 4.
Principal.
The correct answer is principal. All 4 teams got a point.
Yay!
Did you read all? You were able to read all of that?
Yeah.
Judges? Okay. So 1 point for each. Okay.
Excellent. All right, moving on to question number 2. What term is used to describe a situation where someone owes more on an asset, like a house or a car, than what the asset is worth?
20 seconds. Five seconds remaining. Get an answer down. Looks like we're all good. All right. Let's see your answers.
Team 1.
Being upside down.
Team 2.
Being upside down.
Team 3.
Being upside down.
Team 4.
Negative equity.
Song and dance time as the judges confer.
Okay, the correct answer is being upside down. Teams 1, 2, and 3 all earned a point.
We would like to contest on negative equity. I mean, isn't that the same thing as being upside down on the loan?
Do you want to expand on that a little bit more?
Well, I mean, being upside down on a loan is where you owe more than the asset is worth, and so is negative equity. So I'm just wondering the difference between those two.
Give us a moment.
Okay.
Teams, if you were to win the challenge today and bring home all of those prize winnings, what would you do?
I don't think so.
Roth IRA was one answer. I heard invest it was another answer. Any other answers?
Steakhouse.
Steakhouse. I like that answer. I'm all about the food.
Okay, Team 4, fair challenge, will give you the point.
Such
Okay, and with that, we have
smart-
2s across the board. On to question number 3.
All right. Question number 3. With respect to required minimum distributions, or RMDs, what is the difference between a Roth IRA and a traditional IRA?
20 seconds. Five seconds remaining. Get an answer down. All right, let's see your boards.
Okay, Team 1.
Roth IRA doesn't have RMDs.
Roth IRA is pre-tax.
Team 3.
Roth IRA doesn't have a RMD, or required minimum distribution, while traditional does.
Okay.
Roth IRA doesn't have RMDs, while traditional does at 73.
The correct answer is that Roth IRAs are not included in RMD calculations. Points go to teams 1, 3, and 4.
Nice
So
job,
Hunter,
teams.
whoops. I just gave you 1,000 points, Hunter. Let's try that again. Hunter, Mount Hebron, and Scripps. Okay. Hunter, Mount Hebron, Scripps, each 3, Madeira 2. On to question number 4.
All right. In your checking account, what is the difference between your ledger balance and your available balance?
20 seconds. Five seconds, get an answer down. Time's up, let's see your boards.
Team 1?
Interest.
We got nothing for this one.
Team 2?
The ledger
Okay.
is the available
Oh,
balance.
hang on, folks. Wait till I call on you before you go, if you can. Thanks so much. Team 3?
The ledger is the amount available at the beginning of the day, and then the available balance is after all transactions, so end of day.
Okay, and Team 4?
Ledger balance is the amount of money that you have with transactions that haven't actually gone through, while available balance is the actual amount that you have.
Okay, keep them up.
How many seniors do we have among our teams? Oh, we've got a whole mix.
No, just hold on. I know it's wrong, but it's good practice.
Team 4, can you say what's on your board one more time, please?
Ledger balance includes charges that haven't actually gone through, so like the cash hasn't been transferred, while available has. So like just cash that you have, basically.
Okay. All right, thank you, folks. The correct answer is that the ledger balance is the amount of money in your account at the start of the business day. Reflects transactions completed from the previous day. The available balance is the amount of money you can currently use. We give points to teams 3 and 4.
So with that, Mount Hebron and Scripps, both, is it Scripps okay, or do you want to say Scripps Ranch? Scripps is good with 4, Hunter College 3, and Madeira 2. On to question number 5.
All right, question number 5. Insurance companies evaluate risk for the purpose of issuing insurance coverage. This process is called what?
20 seconds. Five seconds remaining. Get an answer down. Time's up. Let's see your boards.
Team 1?
Pooling risk or risk pooling.
Team 2?
Risk evaluation.
Team 3?
Underwriting.
And Team 4?
Underwriting through actuarial science.
Okay, the correct answer is underwriting. Point goes to teams 3 and 4.
Bingo.
These are some tricky questions. You guys are doing
Okay.
very well.
Mount Hebron and Scripps both with 5, Hunter College 3, Madeira 2. On to question number 6.
All right, question number 6. A system where people earn money by providing services or goods on demand, usually through digital platforms, is called what kind of economy?
20 seconds. Five seconds remaining. Time's up. Let's see your boards.
Team 1?
B2C economy.
Team 2?
E-commerce.
Team 3?
E-commerce.
And Team 4?
Service-based economy.
You're making our judges work today.
This is a tricky question, guys.
Okay. The correct answer is a gig economy or a sharing or access economy. So none of the teams got a point on that one.
Okay, scores remain the same. On to the next question.
All right, question number 7. What is the primary reason that certificates of deposit, or CDs, offer higher interest rates compared to regular savings accounts?
20 seconds. Five seconds. Time's up. Let's see your boards.
Team 1?
CDs are locking up money for a certain period of time, so the money is less liquid.
Team 2?
You can't take money out until the term ends.
Team 3?
Less access to money, so liquidity, and that increases risk.
Team 4?
For CDs, your money is locked up. You have to pay penalties if you want to withdraw.
Okay, the correct answer is that they require funds to be locked for a fixed term. So we're, say all 4 teams got it correct. Well done.
Mount Hebron and Scripps both 6, Hunter College 4, Madeira 3. On to question number 8.
All right, question number 8. In terms of being either open-end or closed-end, and in terms of being either secured or unsecured, what is a car loan?
20 seconds. Five seconds remaining. Okay, time's up. Let's see your boards.
All right, Team 1?
The car is secured and open-ended.
Okay, Team 2?
Closed end and secured.
Team 3?
Closed end and secured.
And Team 4?
Car loan is secured and closed end.
Okay. Right, the correct answer is close, end, and secured. So teams 2, 3, and 4 all earned a point.
And with that, we have 7s for Mount Hebron and Scripps and 4s for Hunter College and Madeira. On to question number 9.
All right, question number 9. If you suspect you have fallen victim to a scam, what is your first action?
20 seconds. Five seconds remaining. And time is up. Let's see your board.
Team 1?
You should alert the credit card company and cancel your card.
Okay, Team 2?
Call your bank.
Team 3?
Call your bank.
And Team 4?
Freeze assets.
Keep your boards up.
Okay. The correct answer is contact your financial institution to report a scam, request a new card, and also changing the password on your online accounts. So we're saying teams 1, 2, and 3 all got the correct answer.
I would like to contest. So freezing assets, or I guess calling your bank, they would freeze your assets. So arguably, freezing assets would be the correct thing to first do. And it's inferred by the question that freezing assets should be your first action.
If I can weigh in on this one, some teachers
So I'm going to ask a question while we have the judges confer. You all have learned a lot through this whole process. I'm curious, any surprises? What's been the biggest surprise about financial literacy, personal finances?
That's one of the things that you do. Yeah.
And any surprises?
All right,
No
we
surprises.
have conferred. We're gonna give you the point, but I would say from a clarification purpose, to be more specific on it of how you would freeze the assets.
Excuse me.
But we'll give you the point.
May I contest that? Is that possible? Because you first have to call your bank to.
You got
freeze your
the
assets.
point.
And also, you also, it also depends on the scam. So if you're scammed out of $7, you don't have to freeze your assets. You just call your bank, make sure that you're still secure, and then maybe change your password.
I concur.
So
And the other one.
we appreciate the pushback, very well articulated. We are taking the counsel of how this question is sometimes taught through the program, and there are some teachers who do say freezing the assets is the correct answer. So, but very well articulated.
Okay. The plot thickens. Mount Hebron and Scripps Ranch, both 8. Madeira and Hunter College, both 5. On to question number 10.
All right, tricky questions. Question number 10. What credit card transaction requires you to pay interest every day, including the first day of the transaction, until it is repaid in full?
20 seconds. Five seconds remaining. And time is up. Let's see your boards.
Team 1,
Payday transaction.
Team 2,
Credit payment.
Team 3,
Cash back.
and Team 4.
Transaction.
The suspense. What will the judges decide?
Okay. Yeah. Okay. Okay, the correct answer is a cash advance. So no team got the correct answer.
We are at the halfway mark, and we have a tie for first between Mount Hebron and Scripps at 8, 5 for Hunter and Madeira. On to the second half in question 11.
All right, question 11. You find a house you want to buy and pay extra money to reduce the mortgage interest rate on your loan. What is this extra money called?
20 seconds. Five seconds remaining. And time is up. Let's see your boards.
Team 1,
Down payment.
Team 2,
Down payment.
Team 3,
Down payment.
and Team 4.
Down payment.
No, it's a points. This one's very specific. This is points. Yeah, okay. It's specific. Yeah, okay. So the correct answer is points or discount points or prepaid interest points. So no teams got the correct answer.
Scores stay the same. On to question number 12.
All right, question number 12. If you pay 3 points on a $300,000 house, how much money are you paying for a lower mortgage rate?
20 seconds. Five seconds remaining. Get an answer down. And time is up. Let's see your boards.
Team 1,
3,000.
Team 2,
$9,000.
Team 3,
9,000.
and Team 4.
$1,000.
Okay, the correct answer is $9,000. Teams 2, 3, and 4 all earned a point.
Mount Hebron and Scripps are at 9. Madeira, 6. Hunter College High School, 5. On to question number 13.
Question 13. On your way to work, you get caught in a hailstorm that damages your car. What type of car insurance covers the damage?
20 seconds.
Wait, that's so stupid. I can't put it back
5 seconds remaining. And time's up. Let's see your boards.
Team 1,
up. Comprehensive insurance.
Team 2,
Comprehensive.
Team 3,
Comprehensive.
and Team 4.
Comprehensive.
Correct answer is comprehensive insurance. All teams earned a point.
Nicely done, teams. 10s at the top for Mount Hebron and Scripps. Madeira, 7. Hunter College, 6. On to the next question, question 14.
Stephen contributes pre-tax dollars to an account managed by his employer for his healthcare expenses. If he does not spend all of his money by the end of the year, he will forfeit it. What kind of plan does he have?
20 seconds. Five seconds remaining. All right, let's see your answers.
Team 1,
FSA.
Team 2,
An annual HSA.
Team 3,
HSA.
and Team 4.
Flexible savings account or FSA?
Not an HSA. Okay, thank you. The correct answer is a flexible spending account, so teams 1 and 4 got a point.
And with that, we have Scripps Ranch in the lead at 11, Mount Hebron 10, 7s for Hunter College High School, and Madeira. On to question 15.
Fred does not believe in banks and keeps his money in a sock buried in the backyard under a new concrete patio. He faces little risk of having the money stolen, but his sock money is subject to what kind of risk?
20 seconds. Five seconds remaining. Looks like we're all good to go. Yes? All right, let's see your answers.
Team 1,
Inflation risk.
Team 2,
Inflation risk.
Team 3,
Inflation risk.
and Team 4. And
Inflation risk.
the correct answer is inflation risk. Everybody gets a point.
Nicely done, teams. Scripps 12, Mount Hebron 11, 8 for Hunter College High School and for Madeira. On to question number 16.
All right, we're getting close, guys. Question 16. You buy bonds.
Wait.
Is there a question?
I'm pretty sure you didn't increase the Hunter College and Madeira from before.
Yeah, we're good.
No, I know that we're tied, but wasn't it 9? I don't know.
They're down
Okay.
3.
Okay, never mind.
Yeah, right. Since she's right.
8.
Okay.
Okay.
Okay. Question 16.
I have 8. We have 8. We're good. We're good.
Okay.
Okay, go ahead.
You buy bonds from a corporation and notice that the company can buy the outstanding bonds from you before the maturity date. What is this feature called?
20 seconds. 5 seconds remaining. Time is up. You see your board.
Team 1,
Callable bond.
Team 2,
A callable bond.
Team 3,
Callable bond.
and Team 4.
Callable bond.
Right, the correct answer is a call feature or a callable bond. Everybody gets a point. Well done.
Okay, Scripps 13, Mount Hebron 12, Madeira 9, Hunter College 9. On to question 17.
All right, question 17. What is the general name for property that a bank can sell if a loan is not repaid?
20 seconds. Five seconds remaining. Time is up.
Team 1,
They can use the home as collateral and foreclose the property.
Team 2,
Collateral.
Team 3,
Collateral.
and Team 4.
Collateral.
Right, everybody, the correct answer is collateral. All teams get a point. Well done.
Okay, 14 for Scripps, 13 Mount Hebron, 10s for Hunter College, Madeira. On to our next question.
All right, question number 18. Susan wants to buy XYZ stock for a specific price of $30 or less per share, and she understands that this request will be executed after all previously received orders have been fulfilled. What kind of order should Susan submit?
20 seconds. And time is up. Let's see your answers.
Team 1,
Limit order.
Team 2,
Limit order.
Team 3,
Limit order.
and Team 4.
Limit order.
Correct answer is limit order. All teams get a point.
Hold on a second, just playing with technology here. Okay, Scripps 15, Mount Hebron 14, 11s for Hunter College and Madeira. On to question number 19.
Potentially only 2 questions remaining. All right, question 19. If an employee is vested in their retirement plan, such as a 401k, what does that mean?
20 seconds. Five seconds remaining. And time is up. Let's see your answers.
Team 1,
They've maxed out their contributions.
Team 2,
They take the full employer match.
Team 3,
Maxing contributions.
and Team 4.
They have ownership over the funds in the retirement account rather than the employer.
The tension is real.
No, you're right. 1 and 3 are right.
What will the judge's answer be?
Okay. The correct answer is that they can receive both their contributions and those of the employer if they leave before retiring, or they have their full employer match. So teams 2 and 4 get a point.
Can we contest?
You could have gone in different.
Okay,
Have a
Yep.
We said the max out the contributions, so that would max out the employer match as well.
Right, because if you're contributing the max, then you would also be contributing. No. Okay.
Matter of do you have ownership? Of
Yeah,
the,
do you get to
match,
take it home
not,
with you?
Not how much you
But they didn't specify ownership. They only spec out the max.
You got the point.
No,
They can.
Can you keep,
their shares,
Team
which
2,
is
can you
ownership.
keep hold your board up?
It said max out
It was
employer
take
contributions.
their employer match.
It was
Yeah.
take employer
Which
match.
is take full employer match. Didn't think they could take away points. I just thought they could get points.
Hello? There we go. The reason we believe that 2 is a correct answer versus just maxing out the contributions is that in their case, they were able to take full advantage of the employer match. And it also means that they have the full vesting means that if they were to leave the employer and take the money, they're eligible for the full balance of it. Where maxing out contributions isn't necessarily specific to the fact that they're maxing the employer match.
How would you max out your total contributions to something and not also max out the thing?
Because when you max out the contribution, that means you put the most you possibly could take in. But when they said you're maxing out, you get to
Take
Would
the full employer
take
match.
the full, it means take the full employer match. We interpret it as take out the full employer match.
Let's confer for just a second. Let's confer for a
Investing
second.
is
Did he
the employer match,
Right.
not maxing your own.
But he said
I
take
agree,
the
I
full
agree,
employer
but
match.
could you envision a situation where you can't, where you're maxing your contributions? and-
Still waiting to hear what that most surprising learning was. I don't know that anyone is excited in sharing the surprising learning.
It's what you get to take home.
Vesting schedule.
Correct.
2020.
Max out your contributions.
As much as you want.
The last
If you don't
question.
hit the vesting schedule,
Yeah, that's the
you don't
key.
get
So the
vesting.
problem is
One
to,
more question after.
Hot debate.
Stu said, here's one thing, he said taking your employer match, and we're
We
interpreting
are
that as
giving
taking
that-
it home.
That's right.
Yeah.
I'm giving that as a,
Okay, I'll ask a different interesting question. If you had one piece of advice, teams, to give, do you have a piece of advice? Oh, we got an answer.
Yeah, we
got an
had
answer.
a lot of energy from the judges here, and with a lot of expertise, we do think that there is a scenario where this is all about the vesting. And you could have a situation where you max out your contributions, but it's all around the vesting and you having full availability of that. And we've all come up with a couple different scenarios where the key answer there was the vesting of the employee.
right, so at Walmart, right, so we have or historically had a vesting schedule, right? And if you didn't hit certain years of service with the company, you didn't take your employer match with you. And that's the key to the vesting. You can max out your contributions, but you don't take that home, which I think is the spirit of the answer. Take your employer match, yeah.
Okay. With that, we move on to question 20. We have Scripps at 14, Scripps 16, Mount Hebron 14, Madeira 12, Hunter College 11. On to question number 20.
All right, question 20. You work at a company that matches your 401k contributions dollar for dollar up to 4% and 50 cents on the dollar for the next 2%. You contribute 5% of your $70,000 salary to the plan. What is the total amount in dollars going into your plan this year?
20 seconds. Five seconds. Time is up. Let's see your boards.
It's 3,500 plus 2,800 plus 700.
$7,100.
$6,650.
$7,200.
Keep your answers up, please.
Okay, the correct answer is $6,650, so team 3.
And our final score, Scripps Ranch High School national champions with 16 points. Mount Hebron 15, Madeira 12, and Hunter College High School 11. Congratulations to Scripps Ranch High School.
Congratulations to all of our students and their teachers. An amazing accomplishment to be here today. And of course, congratulations to the winner. Thank you also to all of our esteemed judges, our partners, our sponsors. And now we're going to reset for some pictures. We'll take just a moment before we take some pictures for the awards ceremony.
I've never seen one where they challenge the challenge.
Yeah.
That was